All right. Um, so today I'm gonna give you guys the earning strategy because we've had a lot of earnings lately and a lot of good examples. I figured why not, right? Let's see. First things first. Where should we start off with this? Let's go with scanner. Like chart settings and scanner. So same way we did the breakout strategy, but this is all gonna be one video. It's gonna be a lot quicker and easier. So if you guys already have the layout from the breakout strategy video, then you just need this gap scanner. So it's already on there. If you don't have it, then go to the description and I'll have like a little tutorial, whatever, how to get this layout. And you just go to the gap scanner. So what this scans for is it's going to scan for stocks with, I think I added this filter recently, but you should already have this. So this is ADR percent. It's going to scan for stocks with above a 5% ADR because we want the faster movers. And then it's going to have a little volume filter and then a gap percent. So it's 6% is what the gap is what it's set to. So anything that gaps up over 6% is going to come up on the scan. The scan only works pre-market because after hours it's just showing you stocks that are up like more than 6% on the day. These are all going to be intraday moves. Like not all of them are going to be gaps. Some of them might be, but most of them will just be, you know, shit that's up 6% on the day, meeting that criteria. So DKNG, this is a really good one. I just go to trading view. Here, let me try to pull this up. So once I see that something's like gapping up, I just go to trading view. I'm about to sneeze. How do I change this? All right. How's that for a strategy video? Well, sneeze. All right, so I just go to trading view, look at DKNG, click on this little E right here. I see that it reported 11.6% beat and 12% beat on revenue. So I'm like, all right, sick, right? That looks good enough to me. But that's not good enough, right? We have to make sure that open price is going to be good. So the bigger thing here is that you want a stock that's relatively strong. So this is up at like 170% in the last 6 months, something like that. But now coming into earnings, it's gone sideways and kind of started to decline. The best ones are the ones that are declining like this. You can see this one actually has a little price range here if we check that out. And yesterday it ran right into the top of that price range and then gapped above that. So now it has like complete freedom. It's like I don't know, like a free range chicken or something. It's just going to keep going. It's literally just beast mode at that point. So you have the stock strong coming into earnings. It's declining, gaps up over 6% overnight. So on good earnings, it could be good news too, but let's just focus on earnings because that's much easier to read. A lot of people will try to read news and they might, misinterpret the news or something or think it's better than it is. So stick to earnings. You just want to, that's really all you need. Um, and once you see that, right? So that's what you have. Strong stock goes sideways or starts to decline coming into earnings, gaps up. Now you're waiting for the first 5 minutes. So pre-market, you're gonna check your gap scanner. It's gonna give you a list of them. Check if those have earnings. If they had good earnings, whatever, sure, check it out. Then wait for the opening. So the opening is gonna be traded the same way as you trade the breakouts. You have the first 5 minute candle that forms. Let's I just realized my camera's so big. Hopefully you saw all of that. If you didn't, well, that's unfortunate. So, first off, we have this first 5 minute candle that forms right here. This is a 5% candle. Now, average daily range of the stock is 5.27. So, that's not very pretty to see. I wish that these earnings things would slow down, but most of them have just been going straight up on the first 5 minutes for some reason. Either way, that's fine. I still took it. So, once this 5 minute high is taken out, right here, you buy it. Where do you put your stop loss? Low at A, like always. So the little layout's gonna come with this little calculator in the bottom. So it's gonna tell you where the low of day is, which is what your stop loss is gonna be. How many shares to buy to risk 1%. So you have to right click edit and change this to whatever your risk is. So if I'm risking $1,000, that's like how much it's gonna tell me. And then it'll have this little red light or green light. Green light means you can buy it. Red light means you can't. You know, you can be a little lenient with that. You don't have to be too strict on that. As long as it's not up like a shit ton, it's fine. But that's just a general thing. And then stop loss, you don't have to edit that, but dollar amount of position, you're going to want to come here and change, you know, this 1,000 or whatever the value set to as your risk. So your risk should be 1% of your account. If your account's 100K, then put 1,000 here. If your account's 10K, then put 100 there. Pretty simple, right? Whatever 1% of your account is. But once you have that, so that's going to tell you exactly how many buy and how many shares to buy and where to put your stop loss. And it's pretty simple, right? Like that's pretty straightforward. You just buy it, set your stop there, and now you hold it. So there's nothing to do on day 1, nothing to do on day 2. There's something to maybe do on day 3, 4, and 5. Now that's going to be up to you what you're going to do on which day. So you can make that call. If we look at AAOI, so this was an earnings trade that I took not all that long ago. So this one had the gap, right? Let's stretch this out a little. You don't need to look at this over here. So this one made a big move up. This made a 500% move in 1.5 months. Pulled back about 42% coming into earnings. And then it gapped up over 6%. And then opening range, you know, I bought the 5-minute highs, put my stop at the low. And now this is where, oh, what the hell was that? This is where it gets a little bit difficult. You might have to play with this a little bit and use your brain power. So you have day 1, day 2, day 3. Now, day 3, 4, and 5 are where you're going to be making a decision. So, here's how I usually do it. You can choose to do it a different way if you want to, but this is how I usually do it, and it's worked for me. So, day 3, right? Right before the market's about to close. Like, I'm talking like 5 minutes before it's about to close at the latest. Like, it could be 4 minutes, 3 minutes, 2 minutes, 1 minute, whatever. Right when it's about to close, I'll sell a third of my position. Now, this is on at least day 3. So day 3 to 5. This is when you're going to make that decision. You're going to sell a third or half of your position. What I do is I sell a third on this day, on day 3, and then a third on day 5 around close. Now, in this one, I think I ended up just selling a third here and then just swinging the rest, hoping that it would have continued. But either way, once I sell that initial third or half, whatever it is, you can sell half on day 3, half on day 4, half on day 5, whatever it is. Once you sell some of that, remember, you have to sell it around market close. Don't be selling that shit in the middle of the day. Wait until it's about to close. Once you do that, though, once you figure out what day you want to trim a little of that position, then you're going to move your stop loss to break even. So instead of it being low of day, now it's break even. And what that does is that decreases all your risk and actually puts you in the profit zone. Because you're selling for a profit up here, some of those shares or, you know, a portion of that position is going to be profit that you took. And then the rest would stop out at break even, worst case scenario. So that way you're guaranteed to make money on that position. That is a risk-free trade. And now you don't have to worry about that at all. But where you actually close the position is when it closes under the 10 SMA on the daily chart. So we're really only using the 5-minute for that day 1 entry. Other than that, you don't have to look at it. Like, looking at the 5-minute chart all day is literally just going to make you pissed off, and you're going to be anxious, and you're going to be like, oh, well, the 5 minutes doing this, like, I should probably sell here. Like, don't you think? It's probably a good point. Like, nope, fuck you. Wait till the end of the day on 3, 4, or 5. Very simple. Once you do that, move your stop to break even. Now you have a risk-free trade. Sell the rest of the position when it closes under the 10 SMA on the daily chart. Now don't wait for the candle to close because it's going to be after hours and you won't be able to sell your position. Do it a few minutes before the market's about to close, because when this is down here, the chance of this coming back up, it's only 0.5%. It's actually probably had a pretty high chance of that. But anyways, right when the market was about to close, I'm like, all right, it's about to close under the 10. I'm going to sell the rest of my position right here. If I need to buy it back, whatever, I'll wait for a setup. Which it started to kind of set up. You can see it held the 10, held the 20, got tight right here, and then just broke down. So that is the closest you can get to timing the top of this. Like, people sometimes will be like, oh, why don't you just sell it up here? Like, all right, buddy, let me see you do that, because that shit's just not possible. Sell it when it closes under the 10, and that's it. After that, you can see this stock ends up declining. Like, yeah, it goes a little bit higher for a few days, but, like, whatever, dude. Get over it. You're not going to time the top every time. You're not going to time the bottom every time. But you're going to get close, and that's why this is a strategy. So I think that's, like, literally all to it. I guess we can do a little recap. So DKNG was a good example, more recent. Strong stock moving up. Coming into earnings, the stock goes sideways or starts to decline. In this case, it's, you know, kind of both, I guess you could say. And then it should report earnings. It shouldn't be like going straight up too, right before earnings. Like if this is damn, I can't really think of a good one. I don't know, whatever. But it shouldn't look like this right before earnings, right? Like these few days. Um that's just not something you want. Like Nvidia, it was going up right before earnings. Like, yeah, I had a few days of pullback, but it broke out twice basically and started going up. And then earnings came out. And of course, you know, it didn't really have much follow through after that. Also, it's a super large cap. I figured this works best on some of the smaller caps. Like this is a 12 billion market cap. You know, somewhere around there is a sweet spot. Don't be trying to catch that on the $1 trillion caps and stuff. It's not going to be worth your time. But where was I? I'm so fucking off track. Anyways, let's start this recap over again. Strong stock goes sideways, starts to decline, whatever, blah, blah, blah. You get it. I've said it probably 50 times. Gaps up, good earnings. Make sure the earnings are good. You don't want to see it gap up on shit earnings. Unless it trades really good in the opening range, then it's probably not worth your time. But wait for the first 5-minute candle to form. Once you have that, then you can have the 5-minute candle highs. And then after that, you wait for the 5-minute candle highs to be taken out. You buy it there, set your stop at low of day, and now you hold it for until like day 3, 4, or 5 is when you trim a little bit of the position. Once you make a trim, move your stop loss back to break even, and then you wait until it closes under the 10 SMA on the daily. And that's it. That's pretty straightforward, right? Yeah, so like I said, to get this layout, I'm gonna have the link in the description, all that good stuff, and I'll write up a little tutorial, make sure it's easy for you guys. But yeah, I think that's about it. If you have any questions, just ask me in the comments and I'll reply to them. And yeah, that wraps it up. There's a little strategy for you guys. So when earnings seasons come around, you can make money. It's literally that simple. That's all you got to do. And these have a pretty good success rate too, so it should be easy for you guys. All right, I will see you in the next video, which I don't have any idea what that's going to be, but honestly, just comment what you want the next video to be, because I want to post more educational stuff. The other stuff is kind of boring. So, well, this is boring too, but it's not boring for me to make because, you know, I do this all day. So comment what you want the next video to be. Comment what questions you have. And tell me how many times I repeated myself. All right, see ya.